Here's something that might surprise you. While everyone's been obsessing over NVIDIA's meteoric rise, there's another company quietly powering the entire AI revolution, and it controls over 60% of the global chip foundry market. Today, we're diving deep into Taiwan semiconductor manufacturing company, ticker symbol TSM, and answering the question on every investor's mind: what will the price of TSM be in 2025, 2026, and 2030? Because if you want to understand where TSM is headed, you need to understand one fundamental truth. Every AI chip, whether it's from NVIDIA, AMD, or Apple, has to travel one common road, and that road leads straight to TSMC's fabrication plants. Let's start with where we are right now. As of December 10th, 2025, TSM is trading around $303 per share with a market capitalization exceeding $1.2 trillion. The stock has been on an absolute tear, up 38% year to date and a remarkable 45% over the past year. For context, shares were trading around $134 at their 52-week low, and they recently hit an all-time high of $314. Now, here's what makes this particularly interesting. TSMC's trailing price to earnings ratio sits at around 29, which is actually lower than other AI beneficiaries like NVIDIA and AMD. In other words, you're getting exposure to the same AI megatrend, but at what appears to be a more reasonable valuation. 2025 outlook, the immediate future. So what will the price of TSM be for the remainder of 2025? The consensus among analysts is cautiously optimistic with some near-term headwinds. Wall Street analysts have set an average 12-month price target ranging from approximately $345 to $361, suggesting potential upside of 15 to 20% from current levels. The most bullish estimates reach as high as $450, while the most conservative sit around $210 to $290. However, algorithmic models from CoinCodex paint a more subdued picture for the near term, projecting prices between $298 and $322 by year-end 2025. Why the discrepancy? Two key factors. First, there's concern about a short-term correction in AI-related stocks after their recent rally. Second, ongoing geopolitical tensions and potential tariffs remain significant wildcards. The consensus analyst rating remains a strong buy, with 15 out of 15 analysts recommending either buying or holding the stock. That kind of unanimity is rare on Wall Street. 2026 predictions, the divergence. Now, let's talk about 2026, and this is where things get really interesting because the predictions diverge dramatically. On the bullish side, some forecasts project TSM could reach $363 to even $416 per share. These optimistic scenarios are built on the assumption that AI infrastructure spending continues its explosive growth trajectory, with estimates suggesting big tech and governments could invest $500 billion in AI infrastructure during 2026 alone. But here's where it gets tricky. Other models, including CoinCodex's average prediction, suggest a potential pullback to around $234, with bearish scenarios dropping as low as $156. That's a massive range. We're talking about the difference between doubling your money and losing half of it. What explains this wild variance? It all comes down to three critical uncertainties. First, will AI spending continue at this pace, or are we approaching a bubble? Second, how will geopolitical tensions between the United States, China, and Taiwan evolve? Any escalation could severely disrupt TSMC's operations and supply chains. Third, competition. While TSMC dominates now, Samsung is aggressively investing in advanced nodes with backing from the Korean government. Most analyst targets for mid-2026 cluster around $320 to $358, suggesting moderate growth with significant volatility along the way. Here is the 2030 TSMC long-term vision. Now let's zoom out to 2030. What will the price of TSM be half a decade from now? This is where the bulls really come out. Long-term forecasts range from approximately $549 to as high as $828, with some analysts projecting prices could reach $640 to $647. One particularly optimistic scenario even suggests prices above $2,700, though that seems highly speculative. The bull case for 2030 rests on several powerful tailwinds. TSMC's technological leadership remains unchallenged. The company is currently producing 3-nanometer chips at volume and preparing for 2-nanometer production. Their manufacturing capabilities are so advanced that competitors remain years behind. The AI revolution is still in its early innings. As more applications are built on top of AI infrastructure, demand for cutting-edge chips will continue accelerating. TSMC isn't just making chips for today's AI models, they're building the foundation for neuromorphic computing and quantum-enhanced processors. Diversification of manufacturing. TSMC is expanding beyond Taiwan with new facilities in Arizona, Japan, and potentially the UAE, reducing concentration risk while capturing local demand. However, even the most bullish forecasts acknowledge the bearish scenarios, which project prices around $355 to $658. These more conservative estimates factor in potential slowdowns in AI investment, intensifying competition, and unresolved geopolitical risks. Key risk factors. Let's be brutally honest about what could go wrong, because every investment thesis has an antithesis. Geopolitical risk is the elephant in the room. TSMC's operations are concentrated in Taiwan, and any military conflict or severe sanctions would be catastrophic. This isn't hypothetical, it's mentioned in virtually every analyst report. The AI spending question. Are we building sustainable infrastructure or inflating a bubble? If AI fails to deliver on its economic promises, the sudden drop in chip demand would hammer TSMC's revenues. Valuation concerns are emerging. TSMC's EV to assets ratio of 4.01 is already above its 3-year average of 3.52, suggesting the stock may be pricing in considerable future growth. Manufacturing complexity and competition. Samsung isn't sitting idle, and Intel is attempting a comeback. While TSMC leads today, maintaining that lead requires massive ongoing capital expenditure. We're talking tens of billions annually. The bull case, why TSM could soar. Despite these risks, the bull case for TSM remains compelling. Here's why smart money continues accumulating shares. TSMC holds a near monopoly position. When you control 60 to 71% of the global foundry market and fabricate chips for literally every major tech company, you're not just another semiconductor stock, you're essential infrastructure for the digital economy. The customer roster reads like a who's who of tech. NVIDIA, AMD, Apple, Qualcomm, Broadcom, MediaTek, they all depend on TSMC. And these customers aren't reducing their chip orders, they're increasing them. Pricing power is improving. TSMC isn't competing on price, they're competing on capability. The company can command premium pricing because nobody else can manufacture at their technological level. Recent reports indicate they're implementing multi-year price increases. Financial performance validates the thesis. Third quarter 2025 revenue jumped 37% year over year, while earnings per share surged 51%. These aren't modest incremental gains. These are explosive growth numbers typically seen in much smaller companies. The company's forward P/E ratio of around 28 represents only a 27% premium to its 5-year average, arguably justified given the structural growth in AI chip demand. Now let's steelman the bear case, because dismissing legitimate concerns is how investors lose money. Taiwan risk cannot be overstated. If you're investing in TSM, you're making a geopolitical bet, whether you realize it or not. Recent tensions have only intensified, and while TSMC is building overseas fabs, the majority of their advanced manufacturing remains in Taiwan. AI bubble risk is real. Remember the dot-com boom? Not every technology revolution proceeds in a straight line. If AI companies fail to generate returns commensurate with their investments, the subsequent contraction would devastate chip demand. Margin pressure could materialize. As TSMC expands manufacturing to the US and other higher cost locations, maintaining their historically high gross margins becomes more challenging. Building a fab in Arizona costs significantly more than Taiwan. The competition threat, while currently manageable, could intensify. Samsung has deep pockets and government support. Intel, despite its struggles, has decades of semiconductor expertise. Underestimating competitors has sunk many dominant companies. Valuation timing matters. Even if TSM reaches $647 by 2030, that represents roughly 16% annualized returns from current levels. Good, but not spectacular, especially if you're buying at current highs rather than during a pullback. Analyst consensus, what the street says. Let's synthesize what the professional analysts are saying, because their research teams have resources individual investors don't. The current consensus is overwhelmingly positive. Strong buy ratings dominate, with average 12-month price targets between $345 and $371. That's roughly 15 to 25% upside from current levels. Recent notable calls include Susquehanna raising their target to $400 from $300, citing sustained AI chip demand and TSMC's manufacturing advantage. Bernstein lifting their target to $330 from $290, highlighting the company as their top semiconductor pick. Huatai Securities setting a $320 target, noting significant improvements in average selling prices and profitability. Only one firm stands out as notably bearish, Argus, which lowered their target to $200 from $270. Their concern centers on near-term geopolitical risk and potential tariff impacts. Bank of America maintains a buy rating around $290, reflecting a more moderate view. What's striking is the lack of sell ratings. Out of 15 to 17 analysts covering the stock, depending on the source, exactly 0 recommend selling. That level of consensus is unusual and tells you something about TSMC's fundamental position in the industry. Technical factors and market sentiment. Beyond fundamentals, the charts tell a compelling story. Technical indicators flash strong buy across all time frames, with TSM trading above its 20-day, 50-day, 100-day, and 200-day moving averages. Retail positioning is extremely bullish, 93% long versus just 7% short. That's strong conviction, but also a crowded trade. Interestingly, the Fear and Greed Index reads 39, fear, creating a divergence where the market advances despite fear rather than euphoria. This could signal opportunity. Fundamental drivers why TSM matters. TSMC's business model is uniquely powerful. As a pure-play foundry, they don't compete with customers. They only manufacture for them. This alignment makes them the trusted partner for every major chip designer. The competitive moat is enormous. Building a leading-edge fab costs $15 to $20 billion and takes years. TSMC's 3-nanometer chips command premium pricing, and their upcoming 2-nanometer process extends that advantage. In semiconductors, being one generation ahead changes everything. High-performance computing, driven by AI and data centers, has overtaken smartphones as their largest revenue segment. When your customers are NVIDIA, Apple, and AMD, their success flows directly to your bottom line. Scenario analysis. 3 potential futures. Let me break down 3 scenarios with probability-weighted outcomes. Bull scenario. 30% probability. AI spending accelerates. TSMC maintains its edge. Geopolitical tensions stay manageable. TSM reaches $400 by end of 2026 and $750 plus by 2030. Base case, 50% probability. Moderate AI growth. Occasional volatility but no major disruptions. TSMC retains leadership. TSM trades 320 to 360 through 2026, reaching 500 to 650 by 2030. Bear scenario, 20% probability. AI investment slows, geopolitical tensions escalate, or unexpected competition emerges. TSM pulls back to 250 to 280 in 2026, struggling to reach 400 by 2030. Notice the scenarios aren't equally weighted. I assign higher probability to the middle path because TSMC's market position and AI momentum are strong. Investment strategy considerations. If you're considering TSM, here's how to approach it strategically. Position sizing matters. Current prices around $300 offer reasonable entry points for long-term holders, but expect 20 to 30% swings. Don't let TSM exceed 5 to 10% of your portfolio given geopolitical risks. Dollar cost averaging makes sense rather than trying to time a perfect entry. Spread purchases over several months to smooth volatility. Think infrastructure, not speculation. TSM is a core AI holding with expected 15 to 20% annual returns, not a lottery ticket. Consider covered calls for income or put spreads to define downside risk. Comparing TSM to alternatives. How does TSM stack up against other semiconductor plays? TSMC offers steadier growth than NVIDIA or AMD at a lower valuation, while chip designers like NVIDIA and AMD depend on TSMC for manufacturing. Intel trails years behind technologically. ASML makes the chip-making equipment. Diversifying between TSMC and ASML is strategic, not redundant. Semiconductor ETFs provide diversification, but dilute TSMC's specific advantages. Final verdict, what will TSM price be? So let's answer the core question. What will the price of TSM be in 2025, 2026, and 2030, remainder of 2025? $298 to $360, most likely settling around $320 to $340. 2026, base case of $340 to $380, with a wider range of $250 to $420. Expect volatility and at least one meaningful correction. 2030, my conviction target is $550 to $700, with bullish scenarios reaching $800. Bear case of $400 to $450 seems unlikely barring major disruptions. These forecasts assume no catastrophic geopolitical events and continued AI infrastructure growth. Closing thoughts. Taiwan semiconductor manufacturing stands at the intersection of the most important technology trend of our generation and significant geopolitical risk. That creates both opportunity and danger. If you believe AI is transforming the world and want exposure to the company making that transformation possible, TSM deserves serious consideration as a core semiconductor holding. It's not without risk. Geopolitical tensions, potential AI spending slowdowns, and valuation concerns are real. But TSMC's unmatched manufacturing capabilities and essential role in the AI ecosystem make it compelling. My price conviction, $340 to $380 for 2026 and $550 to $700 for 2030. Now I want to hear from you. Do you think TSM will hit these targets? Are you more worried about the geopolitical risks or more excited about the AI opportunity? And here's the big question. Is TSM already in your portfolio or are you waiting for a pullback? Drop your thoughts in the comments below. Are you bullish, bearish, or somewhere in between on Taiwan Semiconductor?